Now, there's a huge scandal a number of years back from senators getting loans from Countrywide Financial. Countrywide was one of the worst banks during the submortgage crisis. So they were part of the people who collapsed the economy. They gave out loans that were fraudulent, they should have never given out, and the executives made money hand over fist. And one of the ways they got away with it is they buttered up the senators. So they used to have this thing called a VIP loan unit, and they would give VIP loans. You're going to be shocked to find out those VIP loans were at lower interest rates and were very favorable to the senators. Now, the senators then went in front of an ethics committee and said, I am shocked to find out that I was getting such a great deal. I didn't know that. And everybody got a slap on the wrist and we moved on. So, but that's okay. They passed laws, well, regulations, saying we will not do that again. Well, let's check in on that, see how it's going. As usual, David Sirota with a great piece in the International Business Times. And he's actually quoting here London Business School and the work that they did, a great work. And it's actually supported by the Institute for New Economic Thinking. So now let's tell you what that analysis gave us. The analysis from London Business School professors Ahmed Tahoun and Florin Vasvari analyzed how the personal finances of congressional lawmakers changed once they were appointed to the Senate Finance Committee, the Senate Banking Committee, or the House Financial Services Committee. It also evaluated how their finances compared with other lawmakers who were not on those panels. Now, you don't know the results yet, so maybe it didn't affect things at all. I mean, they're just doing a study. Maybe being on the really important banking committees did not affect how the banks gave you loans at all. Well, let's find out. In evaluating lawmakers from 2004 to 2011, the researchers found that Finance Committee members' personal borrowing tended to jump in the first year they were appointed to the panels, a trend not seen for other lawmakers who were given seats on other powerful committees. Similarly, the data show that upon joining the finance panels, lawmakers tend to be given 32% more time, or on average, 4.5 years more to pay back those new debts than loans they previously had and that other members of Congress have. Interesting. It seems like they're still getting some advantages. On average, the first year they join the committee, somehow the banks wind up giving them more loans. And they say, take your time. Take a load off, man. Stretch that loan out. And other advantages that the banks give them. Okay, so the study found that lawmakers also report more favorable debt terms when they join the Finance Committee relative to other years and to the terms other congressional members obtain, including those on the other powerful committees. Now, the reason that's important is they're not just getting better terms and longer loans and getting them immediately just because they're powerful or they're a senator or they're a congressman. They're getting them specifically because they're on the banking committee and they might be able to help those banks. God, this corruption is so obvious. Yet everybody in Washington and New York is like, I see no evil. I hear no evil. The establishment's got this on lockdown. What are you guys all complaining about? Progressives trying to get money out of politics. No, everything's just fine. We're all rich here. Did I say that out loud? Okay. Now here's one more interesting twist from the story. They said looking at which particular financial institutions are lending to lawmakers, the researchers found that underperforming banks provided new and bigger loans to more Finance Committee members than to other members of Congress. Well, that's interesting. So why are these weaker banks doing this even more so? Well, let's find out. Weaker institutions, they explain, which are more likely to benefit from the legislation influenced by Finance Committee members, create connections with these individuals via their lending activities. Finance Committee members can promote and support policies designed to have a positive impact on the financial industry, and thus poor performing banks would reap greater benefits relative to other banks because the threat of insolvency would likely diminish. So you understand that? That's basically crony capitalism. If you're a weaker bank that has trouble competing, what do? You go legally bribe some of the politicians. Well, in this case, whether it's quite legal is up to an ethics committee that'll do absolutely nothing about it. Okay, and you go try to influence them, because if you can't compete in the free market, screw the free market. Let's just, do corruption instead. So, look, the best case scenario here is, as I always tell you, look, these are not evil guys. The politicians are not like, I will get a 4.5 years longer on my loan. I bet you some of them might not even quite be perfectly aware at how much better off than they are. I guess it's maybe senator privilege, than they are, than even not just average Americans, but their fellow senators who are on different committees. And the banks are not necessarily thinking, okay, I give that guy a little bit better rate, and then in return for that bribe, he'll make sure my institution gets advantages. Some of them might think that. But even in the best case scenario, they think, look, if I'm in the room with the guy more, I'm going to influence him more. That's human nature. If I give him a loan, I'm in the room with him more. I'm connected to him. I'm the bank giving him the loan. If I give him a little bit more favorable terms, maybe you do that because you subconsciously know. Or maybe it's written out in a memo. I'm trying to give them the best case scenario. But even in the best case scenario, it is to influence them. Of course it is. And we can't have it, but we do. That's the corrupt system we live in. So that's why it's so maddening when people look at this and then go, guys, can you provide any examples of corruption? Yes, this one and dozens more. And yes, that's part of the reason why, as we speak today, Dodd-Frank was already super weak. Now, every day they're weakening it. And every day they allow the banks to take more and more risks with our money, depositor money. They won't reinstitute Glass-Steagall. Yes, that's another form of corruption. And this corrupt system goes on and on and on, where these guys in power, because they're allowed to be influenced by the people giving them money, continue to rake in all the advantages and put all the disadvantages onto all of us. We got to change the system. Wolf-PAC.com. Let's get an amendment. Do what the Founding Fathers told us to do. They built revolution into the document. Let's take advantage of it. Let's have that revolution so we can end this corrupt system. Wolf-PAC.com. Go.
If you enjoyed this clip, we actually have a 2-hour news show Monday through Friday that you can watch commercial-free if you become a member. Go to tytnetwork.com/join to become a member.